Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, back with our annual Singapore Fintech Festival coverage. Organized by the Monetary Authority of Singapore, the Singapore Fintech Festival is on its 6th edition. We're proud to be a media partner for the 4th year in a row. Joining me for this segment is Sangeet Paul Choudary. He's best known for his work on platform economics and networks effects. Sangeet, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Pleasure to be here.
Now, tell us about platform economics and network effects. Give us a high-level overview of what that is.
Yeah, if you look at most of the largest companies today, if you look at companies like Facebook, Apple, Amazon, Google, but even if you look at a whole range of startups that are coming, that are emerging, and even if you look at traditional companies moving in this direction, most business models today are no longer creating and selling products. They are instead building platforms on which third parties can connect in and interact with each other. So essentially, the idea of platforms is that most of the value that is created in your business is created not internally by your employees and by your assets, but through the participation of third parties, whether it is users coming onto Facebook and creating value over there, or external drivers coming onto Uber. So that's the fundamental idea of a platform business model.
And how are you taking your work in a new direction?
So if we really look at what's happened with the platform business model over the last several years, we saw the rise of the platform business model. We initially thought of this as a shift from traditional gatekeepers like traditional retailers, traditional brokers, to a new form of intermediation where more of the value would be given back to the ecosystem. And the logic over here was that essentially third parties in the ecosystem are helping create value, because the more third parties come in, the more value is created, the more consumers want to join in as well. But what has effectively happened is that these platforms have centralized a lot of the value towards themselves. Most of the value capture now accrues back to the platforms. And this is a common issue that we see, whether it's with Facebook exploiting users' data, or whether it's Amazon exploiting how merchants participate on the platform and the the adverse terms and conditions that they have to subscribe to. So what I'm really looking at is building two lenses in terms of figuring out how to create an equitable future for the platform economy. One is through thinking about how regulation should address a lot of these issues that have come up in the platform economy. And the second is through the rise of Web3, where we're seeing decentralized infrastructure being built as an alternative to the platform model.
And Sangeet, I was reading that this journey led you to the Boson Protocol. Tell us about that.
Yeah, so the Boson Protocol is an interesting example of how we see the future of e-commerce, where a single company like an Amazon, for instance, does not have to control the entire ecosystem and set the principles and the rules for the entire ecosystem, and as a result does not extract a high cut from transactions in the ecosystem. What would happen in a Web3 world, and where Boson Protocol comes in a very significant way, is in creating a model where other players come in and build different parts of the marketplace, and the Boson Protocol essentially acts as a central protocol to govern these market interactions, and to and effectively do so in a way where the transaction cut that it takes from these market transactions stays at a relative minimum. Because what happens in Web3 is that you have to funnel back some of the value of the transaction back to the ecosystem. Otherwise, they won't build the platform alongside you. Whereas in Web2, essentially the entire market infrastructure, the marketplace, is built by a single company. In Web3, Boson just creates a protocol and other players come in and build other parts of the market infrastructure.
See, and that's what's so interesting, Sangeet, because let's use Amazon as the example again. It built the ecosystem. It had the resources to put that infrastructure together. So I guess without it being centralized, who's to determine what direction the platform goes in? Can it really truly be democratized that well? Is it too early to be seen, or are there use cases where this is working without, let's say, Amazon Central Hub dictating the way it's going to go?
I think it's still early days in Web3. We're kind of the reason I don't want to be too overtly positive about the value of Web3 at this point is because we're still kind of figuring out how the evolution of the ecosystem works out when you charge a very low minimal fee. But what we've actually seen with Web3 implementations in general is that if you do not provide sufficient value back to the ecosystem, the value of the token that is really governing value in the ecosystem, that does not rise. And without that, there's not enough third-party participation to come in and build those infrastructure elements. The second piece is that in Web3, there are new forms of governance mechanisms where you don't need to have just a central board of directors and a central company deciding the rules of the ecosystem. The players who own the tokens, they can vote with their tokens in different mechanisms. So there are different forms of governance mechanisms through which the community of owners of these tokens can vote on the rules of how the ecosystem should function as they move forward.
Right. And I'm really glad that you brought governance up because, as you know, ESG is a very hot topic right now, not only at SFF, but, daily we're talking about this. And I think that's really, I guess that's a better way of explaining what my question was really how do you properly govern this? So I agree. I guess we are in early stages to see exactly how this will play out. But I mean, certainly being in the early stages is also a great thing too, because there's so many ways that you can continue to build out this ecosystem, just like we're seeing what's happening in fintech right now.
Absolutely. I think we've seen Web3 develop a lot over the last couple of years. We didn't have native financial infrastructure for Web3, 2 or 3 years back, and with decentralized finance coming in, we're now seeing an opportunity to build an entirely Web3 native financial infrastructure. With Boson, we're kind of building a Web3 native e-commerce infrastructure. There's Web3 native data infrastructure that's coming in. So I think we're really early in what's being built out over here. But if you really see, between 2017, when we last had an interest in cryptocurrency and Bitcoin prices went up and all of that stuff happened, between then and now, there's a lot more value that is being created with these projects. It's not speculation any longer. A lot of these projects are actually creating a lot of value.
Right. That certainly is true. Sangeet, thanks so much for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.